All right, we are live. Mortgage rates surging to new 14-year highs. And while today wasn't the worst day in the world for mortgage rates, moderately bad day, as my buddy Matthew Graham at Mortgage News Daily put it. When you start doing moderately bad days every day for a period of time, it just gets to where you're setting new record highs in mortgage rates day after day after day. While, people can point to, well, historically rates aren't that high. I am no dummy, and I'm not blind to the fact that, like, when mortgage rates double in the last 6 to 9 months, it has a negative effect on affordability, has a negative effect on home buyers and buyer sentiment. I've literally gone through scenarios with agents, especially on the list side, to kind of give them an idea of what the buyers are seeing. Because I have the conversation with buyers every single day, right? Yes, I want to buy something. Yes, I'm in the market to buy. I'm looking at the neighborhood I want to live in, and for the house that is going to suit me and my family, it's going to cost me about $400,000. I have some money saved up, but I don't have, hundreds of thousands. And so a 3% down payment on a $400,000 house is going to end up being principal, interest, taxes, insurance, mortgage insurance, all in $3,000 a month. It's a big mortgage payment, right? And so made a video today that'll come out tomorrow talking about shelter inflation. Housing, whether it's you renting or whether it's you buying, has gone up. Like, that's really the driving factor in core CPI, the inflation number, consumer price index, year over year being up 6.3% as of the last reading. Like, housing is a big part of that. Housing is, inflated and has inflated prices, whether you're renting or you're buying. So what can people do in a market like this? Here's the good news. If you're in the market to buy, there is opportunity galore. There is no longer urgency, meaning you don't have to put in an offer 9 minutes after you walk through a house like you had to in 2020 and 2021. You can now take your time, and as important as not being in a rush, you can ask for seller concessions. There's so much cool stuff going on with structuring offers, structuring seller credit, buying down your interest rate, getting closing costs paid for. None of this stuff was a possibility 6 months ago. All of it is a possibility today. So I'm excited for buyers. And I think that although, there's doom and gloom with housing, with interest rates and whatnot, like, it's not all bad. The Fed is meeting again this week on Wednesday. We're going to see if they hike up the Fed funds rate 75 basis points, 100 basis points. For all intents and purposes, I think it's already baked in. Like I alluded to when I first started this show, all 14-year highs for mortgage rates, right? 6.42% is what Mortgage News Daily says is the average 30-year fixed rate, when they take a nationwide survey of a bunch of different lenders, right? So based on your credit score, your down payment, whether you're working with a broker, whether you're working with a bank, could be higher, could be lower. We're locking a lot of stuff, 575 to 599, even lower if you're getting seller credits to cover some of the rate buy down, because I understand, and I think my clients and a lot of my realtor partners understand, that for the average consumer, the rate and even the price, those aren't the things we're looking at. We're looking at, based on my budget, what is a comfortable payment. And I did this exercise with a realtor partner. I think I might as well do it here, and chime in if you're in the comments, if you want me to run like a specific scenario for you, because it's important, right? For people to understand what they're getting into. And that's all we really do on my side, is present options to people, empower people through education, and say, okay, you've got $36,000 in the bank. You're looking to do 5% down on a $400,000 purchase. Let me show you what that looks like. Total cash to close of $28,332 or whatever that number is. If we get a little bit of seller credit to cover a rate buy down, we can get you down to 5.5. Principal, interest, taxes, insurance, mortgage insurance, all in payment, roughly $2,700. And having people first walk through that and then say, okay, you know what? $2,700, that's doable. Paying $2,450 in rent right now. I know my neighbor's paying $2,800 for the same thing. Luckily, I've got a lower rent payment because I've been here for 7 years. Whatever the case may be, right? You talk through, walk through, educate yourself. What is it that I can afford? Because ultimately, when it comes to home buying, it's not the market's this, the rates are this, the moon and stars are aligned, right? It's your personal scenario. When you're ready to buy and you're in a position where your finances are in order, you got an emergency fund in place, credit score is good, all the things that make you feel comfortable with signing and saying, yeah, for the next 30 years, I'm cool with $2,700 a month. I'm extra cool because I know that the $2,400 rent I'm paying is going to be $3,400 a decade from now. And I'll still be in this $2,700 a month mortgage payment. And oh, by the way, I'll have paid the mortgage down by $100,000. And oh, by the way, I'll have some tax benefit from it. And oh, by the way, if home prices only appreciate by an average of 3%, which is way below historic average, I'm going to have 6 figures in equity as well, right? All the things that come with home ownership, that's the goal. And you just got to find out when the time is right for you specifically. David Cook, I actually pronounced it right this time, my man out there in Chicago. If anybody needs a loan in Chicago, reach out to David Cook. He works for a pretty amazing company, U Mortgage. Joey Garessi, what's up, my man? Thanks for joining. Appreciate you tuning in, staying in touch. All right. What's up, Christopher Yara? Thanks for joining. He's got a question. Anybody else? Do you have any questions at all? Trust me, nothing is off limits. Ask me what I think about home prices. Ask me what I think about interest rates. Ask me what I think about the Sacramento Kings, what I think about, the UFC, whatever it is. Let's have some fun. Let's talk about different things. I'm having conversations day in and day out with doom and gloom folks, with people that say the sun is always shining and that, expect rates to be higher and home prices to be higher and buy right now, and everything in between. But I'm going to keep it real, tell you what I hear, feel, and see. Then you make your own decisions, right? So Christopher's question, thanks for bringing it. With the Fed looking to keep hiking rates and not pivoting until maybe the second half of next year, what's your outlook on home price growth for 2023? Thanks. Okay. It's a great question, Chris. And I think that honesty is the best policy. And the honest truth is my view on the real estate market changes more often recently than it ever has. And part of that is because things are volatile. I understand our issue with affordability. I understand some of the market dynamics with supply and demand. And what I'm seeing right now, if it's any indicator of what's going to go on in the future, I see interest rates staying elevated for this foreseeable future, right? Let's call that 3 to 6 months. And with rates being higher and affordability being an issue, even with not a ton of inventory on the market, buyers do not have urgency. And so the sellers that do need to sell, they've already closed in Texas. They need this money for, the place they bought in Tennessee or whatever their specific scenario is. When there's more urgency on the sell side than the list side, home prices can and will come down. Will they come down by 30% in 1 year? I think that's just ridiculous, even though you're going to find plenty of fear porn YouTube channels and articles about, housing market crash. I don't think that happens, but can we level off to zero appreciation or see 5 to 10% in price drops in 2023? I think so. What you want to be careful for is buyers that I've worked with, and at any given time, we've got 100 plus people pre-approved. Some are putting in offers, some are pre-approved, but staying put. Some are not so actively looking, maybe they pop in and look at a couple things a month, and so they might be 3 to 6 months out. But of all these collective buyers, I know some that are well qualified, ready to buy, able to buy, willing to buy, and they put an offer at 500 on a 525 listing. And in a recent one, they got countered only 5,000 more than they wanted to pay. And so they were willing to pay 500, but didn't want to pay 505. And literally just parted ways. Deal didn't get put together. And I think when we were looking at that, it was a 505 purchase at a 5.25 interest rate. And the cool part is I've got my Excel up, so I can give you real true numbers. 505 with a 5.25 interest rate with 5% down. That payment is $33.71. Now here's what happens. I'm willing to pay 500. I don't want to pay 505. Let's say that same client says, well, now I can buy that house at 490. They didn't want to take my 500. In 6 months from now, I'm going to get it for 490. Remember 3371. That's the payment amount. If we go to 575, an interest rate at 490 on price, I really got them. The payment is 3417. So the payment went up. Rate didn't do a ton. Rate went up by 0.5 point. But it has that big of an effect on payment. So you got it for $15,000 less. But if the rate went up 0.5%, you're paying more per month. Those are the things that, in my head, while I'm not going to say like buy now, get it while it lasts. If it makes sense for people to purchase, sometimes they get in their own way, right? Don't let that be you. Joey Baresi, have y'all been seeing a rise in HELOC business recently? Well, truth be told, Joey, the HELOC products that are available for brokers are not super shiny, right? Not the lowest rates in the industry, not necessarily something that we're selling a ton of, right? We've got some fixed rate products that are 8, 9, 10%. I think a lot of those HELOCs are still being written with small banks and credit unions. They're a little bit more thirsty for the business than we are. So they just price those things sharper. J.R. Wong. We're moving from SAC to Middle Tennessee. Do you have a feel for what's happening in the Middle Tennessee market? Not sure if your licenses include that state. Tennessee's been relatively hot. Tennessee's been one of these markets where, affordability is a lot better than Sacramento. I've actually got my branch license in Tennessee. Connor on my team is in Tennessee. We've got a couple deals going in Tennessee. So here's what you do, J.R. Wong, is you go to greatmortgagebroker.com, fill out the form. Connor specifically from my team will be in touch on the Tennessee stuff. He can get you pre-approved. He can show you what the loans look like. And if you wanted to get a great agent in Tennessee, I've got a link for that as well. homeandmoney.com/Matt. They'll connect with a great agent, and they track all metrics: how fast they respond to you, how good of a client experience their past clients have had. And so they're going to connect you with a great agent. Fun fact, 8% of agents, there's over 1 million agents, licensed agents in the US. 8% of them have done 4+ deals the first half of 2022. That means 92% of agents out there, 4 deals or less. And it's not necessarily talking bad about those 92% of agents, but they're part-time, or they're not that good, or something. Basically, only 8% of agents, like, I wouldn't even say are doing it at a high level. I'd say 8% of agents are even doing it at all, right? If you're doing less than a deal a month, what kind of finger on the pulse do you think that agent's got, right? So yeah, that's a way to connect with a good one. Trying not to get ahead of myself. Yeah, I mean, HELOCs, the companies that do them, I've got a wholesale company, Remen, who I can connect you with, where you kind of self-guide yourself through this thing, and they give you offers on a HELOC. They're funding these things in 5 days. Feel free, as you know, Joey, shoot me a message. I'm happy to look at it. You'll get the honest truth from me on, yeah, it looks like a good deal. The fixed rate stuff is a little bit higher rate, but like anybody who's paying attention is not going to take an adjustable rate HELOC. Like, we're going to get 75 to 100 basis points Wednesday. Next meeting, we might get another 75 basis points. You don't want to take an adjustable rate that can go up 2% in the next 3 months. I mean, that's just my opinion. Jay Homeboy, this is a really, really good question, because I think a lot of people are confused by this. I actually made a video about max seller credits to kind of answer part of this question, which what's the max somebody could buy down the interest rate? Usually, if you're buying a primary residence, to pass QM to make it a qualified mortgage, 3 points is like the max you can pay. If you haven't watched my videos on, what a point means, if you've got a $300,000 mortgage, a point is $3,000, otherwise known as 1%. So 1 point equals 1% of loan amount. I'm pulling up just a pricing scenario because I want to. Okay. This just happened to be in my generic pricing engine. $355 purchase price, 5% down. And I'll show you, because the loan amount's $337. So 3 points in this case is like $10,000. So let's say that the max the lender will allow you to do is spend $10,000 to buy the rate down. That's probably I don't know, in some other markets, what an entry-level house might cost. So conforming, conventional, yada, yada, yada. 2 points. Yeah, so you could get into the low fives paying 3 points on this scenario. $355,000 purchase price, 5% down. 3 points would cost about $10,000. You'd buy it down to roughly 5.25. I wouldn't necessarily ever recommend spending that much in points. The only time I'm going to say okay is if the seller is paying. And I'll tell you why. Because let's say this 5.25 is 3 points and 6.25 is 0 points. So you're going to spend $10,000 up front, and the difference in payment, $20.76, $18.62, quick math, $216. 10,000 divided by 216, quick math. I was going to say 48, but it's 46. 4 years for all intents and purposes for this loan to break even. You may or may not stay in this loan for 4 years. If the Fed reverses course and you got interest rates at 3.99, 12 months from now, you're going to want to refinance. If the $10,000 was spent today and you refinance 15 years from now, sunk cost. Wouldn't want to do that. So yeah, that's my 2, 3, 4 cents. None your business. What about the houses that are being auctioned? What about them? You want to know what that means to the market? You want to know if those are a good deal? You want to know what to look out for? You want to know how it works? Tell me what you want to know. I guess what market you're in and what's going on with those. I'd love to hear your take. I'm not sure what the question is, but what about the houses being auctioned? They're being auctioned. Ryan Lundquist, my man, SacramentoAppraisalBlog.com. This guy's so famous. I've got this like already. SacramentoAppraisalBlog.com. Sac Appraiser on Twitter and Insta. We got to get you back on here, Ryan. All right, let's get back to your comment. Buyers can be more picky about condition, location, and price. I think sellers need to get up to speed on that. Yeah, for sure. I being on the buy side, right? Like I'm team buy side all day, every day. That's my jam. I'm on team list side when I'm talking to them saying, hey, we're going to close quickly. I got fully pre-approved buyers that are, well qualified and going to make it to the finish line. I find it really interesting. I have one that closing is Friday and we're going to close it either Thursday or Friday. So either one day early or day of. And we're getting a lot of heat from the list side on like, better close this thing on time. And I want to tell them, 1, you got your price. 2, you don't have a long list of people lined up behind this buyer to buy. Better cool your jets. I don't know. Maybe I'm just extra protective of my lovely buyers. But yeah, buyers have control, or at least more than they did, right? Like I think all of us would agree as a buyer, you can't go out there and offer $390 on something that's listed for $525 and expect that to ever get accepted. But you certainly are able to negotiate more, get some seller credits to buy down your rate, get some price concessions. All the offers I'm seeing have inspection contingencies. I don't see like the appraisal being waived on any offer. Like how crazy is it that a year ago, every offer had the appraisal waived or at the very least offering to pay a gap between appraised value and purchase price. And now that's like completely gone. None of it. From peak frenzy to buyers saying, I get to call at least some of the shots now. Yeah, this is an interesting one, Ryan. I'd love to pick your brain and get your feedback too on staying in contract. I know a new build stat I saw was like they had 17% cancellations. I think resale was somewhere in the 14 to 15% range, but 1 in 6 deals that get into contract are falling out of contract. I mean, that's a lot. That's a lot. And it's interesting in a market like this that's volatile and changing and whatnot. Like it's interesting to see buyers who are in contract kind of like, might back out. I'll tell you a story too, because I think that stories always resonate with people. I had a buyer who was in contract, locked in at 4.99%. This was a couple months ago, and saw something they liked about as much as the house they were in contract for, but they could buy it for $20,000 cheaper. And they told me like, hey, should I just back out and buy that one? One, they weren't for sure they're going to get it at that price that was $20,000 cheaper. But 2, I told them, I said, listen, you locked in at $499. If we got you that $20,000 cheaper at $5,375, you'd be paying more per month. So interesting interesting market dynamics with buyers kind of, out there looking for deals. %8 mortgage rates might be in the cards by the beginning of next year. That would be pretty crazy. You know what I'm going to do, Mr. What's the one that zooms you in? Control plus? Oh. All right, here we go. Happy to oblige. Can you run an 8% calculation? Let's do this. Watch. We're going to share. I mean, the average down payment for a first-time buyer is closer to 5% than it is to 20. I can tell you that much. So I think the 5% down scenario resonates with people. Sure, maybe you have more, but let's just call it 5% down. This might be a little bit hard to see. See if I can zoom in just a little bit more. What the heck happened? I'm using the 5% down because the other ones. Okay, so this is $490 purchase price. This want to do 400,000. And I know people are watching from all over, so 575 if you got a little seller concession today and bought it down a little bit. Principal and interest, mortgage insurance, property taxes, homeowners insurance. That's what these 4 lines are. $27.89 total payment. Matt, you said you want to see 8%. Before I do it, I'd love to see some comments on what you think that total payment's going to go to. 575 to 8. Right now we're at 27.89. The cool part about this little experiment is that I don't even know what it's going to be. I got a feeling it's going to be more than 3,000, but I'm going to give you guys chances to respond. And don't cheat, right? Just make it fair. Just give an honest guess of like rates go to 8%. What's it going to cost to buy a $400,000 house with 5% down, all in? All these other things, mortgage insurance, property taxes, and hazard insurance. That's all going to stay the same. The only number's going to change is this principal and interest, this 22.18. How much will that go up? Stay tuned to find out. Back after this commercial message. What's up, Mark McDonough? How you doing, brother? Hope all is well with you. If anyone wants to look at Sacramento real estate, you got to follow Mark McDonough team on YouTube. This guy does property tours like HGTV. This guy goes from neighborhood to neighborhood, from Natomas to Elk Grove to Sac to Folsom to Loomis, Granite Bay, and everywhere in between. A really good feel for Northern California real estate. And not just that, cool property tours, man. We are getting our buyers into some pretty epic deals. I believe it, man. You know what I'd love to hear from you, Mark? Because I literally had 2 agents reach out to me today and talk about trouble selling in a market that I know you know a lot about. You sell luxury homes, so you know about $1 million, $1.5 million. How do you get those properties to sell when the scenario I ran for a buddy of mine was 3.5% versus 6.5%, 1.75 interest rate? I'm sorry, 1.75 price with 20% down, all in payment went from $8,400 a month to $11,000. Like that's a $2,600 increase. No wonder not as many people want to buy that thing because 11 G's a month, a little bit of a stretch for most folks. Matt, 4,000. That's a stretch. I don't think it's that high. 38.25. I think 3,500 is going to be closer. All right, let's do it. This is not super clear, but let's build up the drama, right? 27.89 If you even went up 1% to 675, now you're above 3,000 a month. If rates go to 8%, dun dun dun, 3360. Justin G wins. Contact us for your prize. Yeah, DM me on LinkedIn, Justin. Let me know where you're at. I'm going to send you a prize. Why not, right? All right, Mark McDonough. Let me know. Target higher price point markets for luxury listings. Works like a charm. What are you doing to sell these things? I'm genuinely interested. We could talk offline about it, but if you got some ideas here, feel free to share, because I told real estate agent buddies of mine that I talked to today, like, you can go from 175 to 1.4 and still have a higher payment. Meaning 175 at 3.5% earlier in the year is a smaller payment than if you bought it for 1.4 today, with a payment that's, for all intents and purposes, double, 3 to 6, right? 6 sold via YouTube video tours, all Bay Area. So we need that Yay area money. All right, I hear you, brother. What else you guys got? What else you guys want to see? That 8% thing was fun, Matt. Like, a $400,000 house having a $3,300 payment. It's tough, but it's possible. I don't think that rates will make it to 8%. I'm of the belief that we've got a lot baked in to our current mortgage rates. And, even if the Fed does 100 basis points on Wednesday, we're kind of expecting it, right? Like we're prepared, at least to some degree, as far as the, mortgage-backed securities market. And so I would expect rates to remain elevated until we get 2 or 3 lower inflation readings. I wish I had the chart today. I talked to Barry Habib last week. We did a full hour-long interview, and he made some good points about the month-over-month inflation readings from summer of 2021 being really low. 0.2, 1.7, 0.2 in month-over-month. So when the readings came out this summer, when we replaced it with a 0.4 or 0.5, it showed that the core inflation number, it pulled it up. October, November, December of last year, really high inflation readings, 0.5, 0.6 per month, right? So if we've got a 0.4 or 0.5 in October, November, December of 2022, which will probably have even lower, if we get some 0.2, 0.3s, it's going to show that year-over-year number coming down. And that inflation coming down is going to have a downward drag on interest rates. Barry preached it in our conversation and in our call that mortgage rates, while a lot of people will point to the 10-year treasury, a lot of people will point to a lot of other things, mortgage rates follow inflation. Inflation goes up, mortgage rates go up. Inflation comes down, mortgage rates follow. So as inflation gets pulled down from all this monetary policy and all this J-Pow Fed intervention, we should expect rates to come down. Barry sees the end of this year, early next year, rates coming down. I don't know if it happens that quick, but it could, and it's going to be a good thing for buyers. I know that. We will, though, in October, November, December. Pro cons. Will the luxury market fall harder? I'd love to hear Mark chime in on this one. I think that it will. I just think that, like, while a lot of high net worth individuals did well in 20 and 21 and could afford to buy, able to buy and willing to buy are separate buckets. And so we know that the able to buy bucket is shrinking. Rates go up. Mortgages, payment wise are more expensive. Less people are able to. But even within that able to bucket, you also have to be willing to buy. And if uncertainty in the market, buyer sentiment, and other things come into play, rest assured that that willing bucket is going to shrink as well. So I think both of those things are shrinking at the same time. And that's why you have such a decrease in demand at all levels, really. At the entry level, the move-up buyer, the luxury buyer, all of them. There's less that are able, and able's the whole thing. Within that able bucket, there's some that are able but not willing. And you've got to be both, right? Just because I talk to somebody and get an online application and upload all their docs and say, rubber stamped, you're pre-approved, you're ready to roll, you can write offers, connecting your real estate agent to our amazing software, and they can pull pre-approval letters at any time. I've said that a lot this year. And I can tell you, as somebody who has over 100 people pre-approved, they're not all writing offers. They're not all in a hurry to buy. Some of them might choose not to buy. So as much as I pointed in the past to a lack of supply being the reason why real estate prices were likely not to fall, demand destruction is real. The effect that you would expect higher interest rates to have on demand has taken hold. Demand is down. The good news is that for buyers, this means you've got control. You've got options. You've got leverage. You've got opportunity. I've got at least a half of a dozen stories of buyers who are investment groups that I'm part of who have offered ridiculous offers to Open Door, and Open Door laughed them out of the building a month ago and then accepted their offer this month for the same price or lower. Sound tenement. Rates come down after the destruction of the economy, and then the average buyer can't afford or won't buy. I mean, the average buyer can't afford or won't buy like today. If you're asking my opinion, right? Like 400 grand, 5% down, 5.75 interest rate. And this is a payment, $27.89 on this scenario that the average buyer can't afford this, in my opinion. And then you come to a market that's not even the fanciest of markets, but Sacramento, and you want to live in a decent neighborhood with decent schools, $500,000. Now you're talking $3,500 a month. That's hard. No sugarcoat. It's just the way of it. So there's going to be some concessions made on the list side. There's going to be deals to be had, and there's going to be some negotiations. Okay, Mark, what you got? New luxury areas will be hurting. Older, more established luxury areas will be fine. East Sac fine. Crocker Village not fine. That's a good point, right? And I think that, yeah, the established areas where people are just like, there's only so many houses in the fabulous 40s. So there's going to be demand for, East Sac Fab 40s. That's an area that won't ever go out of style. But yeah, some of these newer developments where they threw together some nice houses in decent neighborhood. I wonder how Crocker Village is doing. I remember when they were. I'm curious now, Mark. Tell me about Crocker Village. Crocker Village. Anyhow, we'll look at that stuff later. All right. Arun, builder's mortgage company offering discount on purchase price with not so attractive rate, but outside lender gives decent rate with no discount. Discount in range of 7.5 thousand. What would you suggest? Well, this is a pretty common thing. A stat that I thought was pretty interesting was that I think it's 73 or 77% of buyers use an outside lender. And it's because of this reason. If you came to me and said, hey, my lender is offering me a $7,500 credit, or the builder is if I use their lender, but the rate seems kind of high. They're offering me a 6.75. And I look at that and I'm like, wow, 6.75. If I could offer you whatever 599, 6.25, is that more valuable than the 7,500? You really have to weigh it. And what I tell everybody is get me a loan estimate from the builder, because there's multiple things that go into it, right? Like a credit of 7,500, but then their 6.5% rate has a $10,000 cost. If I can get you 6.5 for 2,000, then I'm net better, right? Because they're 10,000 minus 7,500. Just because Kohl's has a sweater that's $39 and it's discounted from $99, good advertising on Kohl's part. Like that's something they do well. If you can go straight to Amazon and buy it for $29, then $29 is the better deal. $39 is not better just because it got marked down from $99. So that's what they do, is they want control of all of it. A lot of times they own the mortgage company, so I get it, right? But if they show you the discount, oh, wow, 30% of people just see that discount and they're fine. They just use the in-house lender. The 70% that are smart say, hey, if I get the same rate for free over here, and you're telling me the rate cost $11,000, but you give me $7,500 credit towards it, that's still $3,500 worse than the guy who offers me that same rate for free. The more you know. That's why you follow this channel. That's why you tune in for gold friggin' nuggets like that. Anyhow, I think I'm going to run. I've got people still getting pre-approved. We still got action in the market, folks. Don't think that the real estate market just press pause. Got clients getting pre-approved every day, negotiating sweet deals. Like Mark said, he's got clients that are just negotiating really, really good deals right now. Now it's buyer time. Q4 2022, buyer time. Q1 2023, buyer time. I went and looked at a house personally, my wife and I, and it was a quasi investment, investment property for the most part. And this thing started at one price, got reduced by 50 grand. I was telling my realtor that I was thinking about writing 75 lower than that discounted price. And he thought I was crazy, I think, for offering that. They've since reduced it another 50. So now they're only 25,000 more than my crazy offer. And the agent texted this morning and told them, my buyers are getting a little desperate. if your buyer puts an offer, it will be looked at. It will be entertained. So there's that. Does utilities on rental count towards DTI? No. Basically, the only thing that's counting on your debt to income ratio is the debts that show up on your credit report, and then the housing expenses, principal, interest, taxes, insurance, but not utilities or, landscaping or anything like that, right? And so on rentals, it's the same as if you're buying a primary residence and you make $8,000 and your debts and your mortgage payment have to be below $4,000 under that 50% DTI, if that's what the DTI is for that program. Very similar, but then you start adding rentals. You've got rental income to offset payment and things like that. What do you think about the luxury market in Marin County, California? I mean, I'm not an expert on the luxury market, but my guess from what I've seen, super high net worth individuals are exiting California more than they're entering. So I wouldn't put a lot of stock in, any luxury stuff, because 10 million plus luxury stuff is, tech 100 millionaires, billionaires, and that's the market for those type of homes. A lot of those folks don't want to pay 13% state tax. A lot of those folks don't want to pay, taxes involved in California. Yeah, maybe someone's buying it as a second home. If they're a, billionaire whose primary residence is in Florida or Texas or somewhere else, maybe they, want a Marin County vacation home, but I don't know. I probably don't know enough about it to really speak on it. My bread and butter is generally people buying stuff between 400 and 2 million. And there's plenty of stuff, that's just a starter home in some of these places like Marin County. That's $2 million, right? It's a 1,700 square foot, 3-bedroom, 2-bath. But anyhow, that's that. Jay Homeboy, a $500K house, 20% down conventional, extra $100K in bank. Is it better to make a bigger down payment or buy down points? Can I use $40K to get 0 interest? Or is it 3% max buy down from buyer or seller? 3%, which I talked about, was like the max that you're allowed to do, based on like passing QM guidelines, being a qualified mortgage. So even if you had it, even if you wanted to, you couldn't buy it down for more than that. So I'll tell you exactly what you're looking at as far as a buy down goes. For sure, no mortgage company's going to lend you money at 0%. Well, I take that back, right? Like if you're crazy enough to want to pay $150,000 up front in interest, maybe I'd lend you the money at 0%, right? Because you'll just give it to me all up front in today's dollars. Well, you don't want to do that. 500K, 20% down. If you have an extra 100K in the bank, I might not do either. I might not spend a bunch to buy it down or put more towards principal. I think it's going to be something like every 10,000 you put down saves you $40 to $50 a month. You put down like an extra 100, you might save 500 a month. Your call on if you'd want to do that. But, this scenario is pretty similar to one I ran earlier. Your 3 points, which is kind of the max you can buy it down, is going to get you into the low 5s. So you're still paying, 5% plus interest. And 5.25% versus 6.25% is 2208, 2462, $250 ish per month that you'd save. 3 points is 12 grand. 12 grand divided by 250. I can do that one. It's exactly 48, right? So it's a 4-year break even on that buy down. If that didn't make any sense to you, I've got should I pay points video out. I think I go into detail there about like the cost versus benefit analysis that you can do for paying points. So that's that. If you get some credit from the seller, maybe use that, but maybe you use the credit from the seller to pay the closing costs. You take something in the middle. You could do 5,875, and that might only cost you a point, right? Save the rest to pay for closing costs. Know that you're okay with the 5.875 interest rate. If rates come down to 4.5 or 4, 12 months from now, refinance. You've always got that as well. Thanks for the question. VQuez, thanks for joining. Appreciate you being here. Hope all is well. If you're renting out your current home, Eric, great question. This is an investment question. We will use 75% of that lease agreement. You're leasing it for $2,400 a month. We'll use $1,800 a month to use towards qualifying. It does change, and it changes once you've been renting it for 2 years, and it shows up on your tax return. Then we use what shows up on your tax return, for better or for worse. If you hate the government and you're not showing much, it's going to look not so good on qualifying. If you love paying money to the government, then they might be better than the 75%. So that's that. Joey Garessi, thanks for joining. I'm gonna hit you up, man. I'm gonna shoot you a message. That conversation with Barry Habib was cool. It was a good one. So thanks for watching, everybody. Hope you enjoyed it. Again, if you want to work with the greatest team on earth, go to greatmortgagebrokers.com. Keep getting positive feedback. Let me know if for whatever reason you've reached out, filled out a form, and you're not getting best-in-class client experience. I will go bust some heads and let folks know we're in this to serve people. If you want to connect with an agent in your area, homeandmoney.com/Matt. Connect with a great agent. Opportunity abound all over the place in all kinds of markets. You just got to know what you're looking for. Most of the time, people are just following headlines blindly. Market's crashing. Rates are highest they've been in 14 years. I don't know what's going on. I'm going to stick my head in the sand. You stick your head in the sand, your head comes out of the sand, and all of a sudden you got $3,400 a month in a rent payment. Probably not the place you want to be. At the very least, empower yourself through education. Find out, do I qualify? What do I qualify for? What is that on a monthly payment? All that good stuff. We're happy to help with that. GreatMortgageBroker.com. Talk to the team. We'll get you squared away. And if we don't, call me. Let me know that we're trash. Talk to you soon. Until next time, we gonna see.